to take us through it, try and tread that very delicate path. Pete McGuire joining us from XM. Pete, good to catch up with you on a Monday morning. All right, you're looking pretty spiffy there, obviously expecting an exciting week ahead. We're going to talk about the RBA, of course, tomorrow. But before we get to that, let's start with currencies, what you're seeing there at the moment. And, obviously it is that fine line that's been trod at the moment as you're making the point, in fact, that the concerns about inflation essentially now being replaced by concerns about recession. How is that playing out in currency markets, particularly with the King dollar?
Well, good morning, Andrew. Yeah, 105.10 is the US dollar index. So it's had quite a strong move over the last couple of days. Nice move to the upside. You've seen that further, structural weakness across the pound, euro. Sitting up under 104, Andrew, I'm thinking maybe parity sometime over this northern hemisphere summer. So yes, weakness there. And of course, the situation with the yen. And we're sitting at 68 cents. So yeah, King dollar certainly still reigning supreme.
All right, and we can see the relative performance elsewhere of the major currencies there, including the Aussie, which is currently 16. It's sitting below 69 at the moment. What's the outlook there for the Aussie there? And I guess given the broader economic outlook.
Well, if we see RBA tighten 50 basis points, you could see a move to the upside, I think, over the next 48 hours for the Aussie dollar, Andrew. You've also got the holidays today, Independence Day in the States, so not a great deal of news coming out of that part of the world. And the overall theme, I think, is going to be, Aussie may have, bounced off these lows, so there could be a couple of cents to pick up as far as traders over the next couple of weeks. The situation we're thinking about, the inflation story, Philippines looking, South Korea and ourselves from the Asia basket this week as far as rate rises. So yeah, it's certainly a concern.
All right, well, let's talk the Reserve Bank, obviously, with its meeting tomorrow. As you say, expectation going to hike another 50 basis points. What, though, is the market built in then as far as where the cash rate, perhaps that terminal rate's going to finish at?
Well, I think it's 50 basis points from here. How many more rate rises do we see over the winter period? So if they're going to be aggressive, Andrew, are they going to front load? Are they going to surprise? And the front load of 75 basis points, because there's even some analysts saying that may be the surprise tactic, so they come out of the blocks a little bit quicker and more aggressive. I'm just sitting here, waiting to see what happens. I think all traders have got their hands on the wheel and they're conscious as far as what central banks can do to currency markets in a short run. I noticed one thing, Fed Chair Powell saying inflation's its number one concern, but they're saying they could see rate cuts in the second half of 23 for the Fed.
Well, in fact, I was just speaking to Craig James from CommSec about the prospect of a rate cut here, end of 23. What are your thoughts?
Well, I think that's every possibility. Depends on how aggressive they are over the next couple of months. If they were to ratchet it up another 1.5 or 2% from its current levels, Andrew, then that could be the situation that it presents itself maybe even earlier than the end of 23 if the recession starts to bite globally, and that's the concern across the Asia region, and we play in that market very, very heavily. So are we entering a recession period?
Pete, what are you seeing with commodities at the moment? And clearly that's also affecting the Aussie at this point.
Yep.
Iron ore continues to tumble.
Absolutely, and so do the base metals, Andrew. So you're thinking where copper's sitting at the moment at $8,000 a metric ton, well down from its 10,500 we were only about, I think, 4 or 5 months back. And iron ore, as you mentioned, is being hit hard. Crude oil still staying very strong, still at that 111 for Brent, 108 for WTI. So we don't get a lot of movement there. Gold's come off a little bit. But the overall theme, I think, is going to be structural weakness from a demand side for a lot of those base metals. So we've got to see how we can try and re-engage. So some of the export numbers coming out of Australia, I've noticed, are quite strong from a commodity side. So, yeah, we're playing fairly well here in Australia, but the rest of the world's doing it fairly tough.
You mentioned gold there. Are you seeing any upside there? I guess, once again, it's all about the US dollar at this point.
Well, exactly right, Andrew. That 105 for the US dollar index, gold's come down to pressure at 1800. It may breach that and maybe, a little bit further sell off. I think the overall theme is going to be stronger, but let's just see what Fed Chair Powell does as far as rates and the minutes coming out on Wednesday. And the overall, I think, picture from gold, from a jewellery demand has been very strong across Asia, and that will continue to grow because people are putting it under their bed. So the demand for physical, I think, will be very strong over the next year or two.
Pete, let's take a closer look at the US economy at the moment. And of course, the big number will be at the end of the week with the non-farm payrolls. What are the expectations there?
Well, they won't be as strong, Andrew, as what we saw in May. We're seeing a little bit of a tail off as far as, that headline number. So I'm thinking it's going to be weaker for June. But the overall situation is, are we going to see layoffs start to really ratchet up over this, again, the Northern Hemisphere summer season? We're noticing some of the big corporations are starting to freeze employment and taking on new headcount. So this is going to be a tough one. And the overall thinking is that we're going to see a little bit softer numbers coming in June, July, August. So, yeah, that's going to put pressure to equities and, forward earnings.
How are you looking at the financial sector, particularly in the States at the moment? And I noticed that, well, you've taken note there. Obviously, the Fed had that recent stress test of the banks, and they all passed.
Yeah, they all got a clean bill of health. We're thinking, when you look at that, 40% wipeout as far as commercial real estate, 55% downside for US equities. And these are on the stress test, and I think unemployment hitting at 10%. So they're the metrics, and they pass with flying colours. So that tells you from the liquidity side that it's relatively strong, the US banking situation. Let's just hope that that doesn't materialise, Andrew. We'll all be looking for a job.
Well, that's very true. From an equity point of view, though, how are you seeing the financials at this point? Of course, they too have come off significantly this past 6 months.
Yes, exactly. Well, that first 6 months has been fairly dire for them. Let's hope that we're nearly at a bottom. We saw a little bit of a push up Friday. I noticed the Dow's up 1% and the S&P up 1%. So there could be a little bit of a reversal, but I think that we've really got these recessionary fears, inflation story. So it's going to be hard for a lot of the banks to post good earnings, and it's just going to be a tough, hard grind out for the next 6 months leading up to Christmas, Andrew.
Pete, thanks for talking through that. Hopefully, as we begin the new financial year here in Australia, of course, this quarter, hopefully it's a little better than the last one.
One would only hope so, Andrew, though we're going to hold our breath on.